This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC's oil output fell in December due to lower supply from Iran and Venezuela, which offset an OPEC Plus agreement to raise production for the month, a news story found on Friday. The Organization of the Petroleum Exporting Countries pumped 28.40 million barrels per day last month, down 100,000 barrels of oil per day from November's revised total, the survey showed, with Iran posting the largest decline. OPEC Plus has slowed the pace of its monthly output increases amid concerns of a supply glut. Many members are running news story limits and some are tasked with extra cuts to compensate for earlier overproduction, limiting the impact of further increases.
Oil prices rose 2% on Friday on growing supply worries linked to intensifying protests in oil-producing Iran and an escalation of attacks in Russia's war in Ukraine. Brent futures settled $1.35, or 2.18%, higher to $63.34 per barrel, while U.S. West Texas Intermediate, WTI, crude was up $1.36, or 2.35%, to $59.12. Both benchmarks climbed more than 3% on Thursday, following 2 straight days of declines. For the week, Brent rose about 4%, while WTI gained about 3%. The uprising in Iran is keeping the market on edge, said Phil Flynn, senior analyst with the Price Futures Group.
Moving on to the top news in the energy sector.
U.S. President Donald Trump met with executives from some of the world's largest oil companies at the White House on Friday to discuss Venezuela, saying he wants them to invest $100 billion in the country to vastly expand its production. Trump has named oil as the priority for his strategy for the South American nation after U.S. forces seized its leader Nicolas Maduro in an overnight raid on its capital January 3. American companies will have the opportunity to rebuild Venezuela's rotting energy infrastructure and eventually increase oil production to levels never, ever seen before, Trump said at the opening of the meeting.
Asia spot liquefied natural gas prices edged lower this week, weighed by tepid demand in the region and ample supply conditions. The average LNG price for February delivery into Northeast Asia was estimated at $9.50 per million British thermal units, slightly down from $9.60 per MMBTU from the previous week, industry sources said. Northeast Asian demand continues to remain weak despite a cold snap in December, with limited restocking demand on a spot basis following weak power sector demand, with coal still favored for most generation, said Martin Sr., head of LNG pricing at Argus. Next, we have the top news in metal markets. Gold prices rose on Friday and were on track for a weekly gain, as investors weighed weaker than expected U.S. payrolls data along with broader policy and geopolitical uncertainty. Spot gold was up 0.5% at $4,496.09 per ounce as of 1:31 p.m. Eastern Time, 16:18 GMT, and was set for about 3.9% weekly gain. Bullion hit a record high of $4,549.71 on December 26. U.S. gold futures for February delivery settled 0.9% higher at $4,500.90. U.S. non-farm payrolls in December rose by 50,000, missing expectations of a 60,000 gain, while the unemployment rate eased to 4.4%, below forecasts of 4.5%.
Copper and nickel are poised to end the week higher on Friday, supported by supply concerns, despite a recent sell-off from investors booking profits after a rally. The most active copper contract on the Shanghai Futures Exchange closed daytime trading down 0.45% at 101,410 yuan, $14,526.16, a metric ton, ending the week up 1.60%. The benchmark 3-month copper on the London Metal Exchange, however, rebounded 1.20% to $12,873 a ton, set for a 3.24% weekly gain.
We will now look at the top news in the agricultural sector.
Global rice prices are expected to remain under pressure in 2026, as major producers, including India, Thailand and Vietnam, compete to ship surplus supplies, prompting buyers to delay purchases, trade and industry officials said on Friday. Lower rice prices will benefit price-sensitive consumers in Africa and other regions, but they are likely to squeeze the already meager earnings of farmers across Asia, which produces nearly 90% of the world's rice. Key exporters such as India, Thailand and Vietnam are sitting on surplus, and buyers know it. They're testing sellers' patience by holding back on purchases, said Nitin Gupta, Senior Vice President at Olam Agri India.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.